Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Plenty to talk about this week with reports and some of the things going on around and in the global market. But to get things started, let's recap what happened this week on the markets.
Yeah, if we start on the cattle side of the equation first, cash-fed cattle closed down about 50 cents this week, while cash feeder cattle prices were anywhere from $3 lower to $3 higher as we went through the week. On the future side, we gave up a lot of the gains that we saw last week in cattle markets. The October live cattle futures down a little more than $4 this week, while the September feeder cattle futures closed down $4.25. When we look at that choice box beef price, we're actually up a little more than $4 this week. And we really had strength across the board on all of those beef choice box beef components this week. On the pork side, again, maybe not so much good news this week. Barrow and gilt prices down $3.25 for the week, while that October lean hog futures gave up all the gains from last week and then some, being down $7.25 for the week. More weakness on that pork cutout value, down nearly $3 this week. And of course, we can all guess that pork bellies being down 10 cents drove much of the weakness that we saw in terms of pork belly prices.
On the cash hog side of things, Scott, there really has been no break for that market. It seems like it's been nothing but a downhill slide for the past month or so.
Yeah, absolutely. Just, so a little bit of help there last week, as we thought maybe some additional discussions were going on with China that might be helpful from a tariff standpoint. But I think as we've gone through this week, we've continued that downward slide as large supplies of hogs continue to drive that market.
And we're headed into the peak season for slaughter numbers too, right?
Absolutely. So we know we got bigger runs coming between now and the end of the year. And I think unless we get something really strong on the demand side, we're going to continue to struggle to try to get any kind of strength on the hog side of the equation.
Scott, let's dig into these reports. Start first with cold storage this week as we take a look at that. Where are we sitting when it comes to red meat and poultry supplies?
Yeah, when you look at where we were relative to a year ago, we're up 5.6% in terms of total red meat and poultry supplies. The chicken side of this equation continues to be burdensome in terms of those overall freezer stocks. Chicken stocks were record large here for July, exceeding their 2002 record by 1%.
And as we take a look at those other numbers, we know chicken stocks are growing, but what about beef and pork? How have they been running so far this year?
Yeah, so really some different stories when you look at what's been happening to beef stocks versus pork stocks. If we take beef here to begin with, we started the year in January being down nearly 7% relative to a year ago. But now as we look at the data for the end of July, we're up 12.3% relative to a year ago. So really building beef stocks as we've gone through the year. Yet on the pork side, we started the year up nearly 11%. Over January of 2017. But now when we sit here in July 18 down 1.2% relative to where we were a year ago at this time. So a very different story in terms of what's been happening to the movements of beef and pork ending stocks.
Scott, on the pork side of things, that's a pretty significant swing from the start of this year. Typically, we would think that there are shorter supplies. Maybe that would be supportive of prices, but that's really not been the case.
Yeah, I will continue to say when you see the expansion in total meat supplies and pork supplies in particular that's been occurring, I think we have a situation where margins for some of those folks, once you get beyond the farm level, can certainly grow in what's this larger pork supply situation. And I think we're starting to see that even with what are stocks that aren't all that different from where we sat a year ago at this time.
Livestock slaughter was one of the other reports we received this week. Anything out of the ordinary or different from what was anticipated going into the report?
Yeah, I don't think we really see too much that's not expected. I guess it just reminds us When you look at beef production for the first 7 months, up 4.1% relative to a year ago. Pork production up 3.8% relative to a year ago. That we've got a lot more supplies of beef and pork that we have to deal with this year, and I think livestock slaughter just confirms that's what's been happening.
Scott, we've been talking a lot about drought conditions as it ranges across much of the cattle producing parts of the country. Did we see an impact or maybe anything maybe related back to that in that report or even in the cattle on feed?
Yeah, so I do think when you look at beef cow slaughter in particular out of the livestock slaughter report, it does show some interesting outcomes. I remind us that the drought that we're really seeing in 2018 is a lot different than what we would have seen back in 2012. 2012, much more widespread drought that affected a lot more areas of the country. When you look at what we've been doing this year, so federally inspected regions that include states like Oklahoma and Texas, see a 48,000 head increase in beef cow slaughter relative to a year ago. Whereas when we look at the southeast part, we're actually talking about beef cow slaughter running below year ago levels. So perhaps some expansion might be occurring in the southeast given the good weather conditions that tend to be happening there. Whereas you take Oklahoma, Texas, southern Kansas into Missouri as well. You know that beef cow slaughter has been up, and you kind of wonder what that's going to do for beef cow numbers when we look at that January 1, 2019 report.
And it's especially bad in parts of Missouri where you're located, and as you get into those, as you look at that drought monitor map.
Yeah, absolutely, and we are seeing increases in both feeder cattle supplies in the sale barns, as well as increases in beef cow beef cow sales that are occurring there. In southwest Missouri in particular, as it's gotten dry there in the last several weeks, we are seeing a situation where a major increase in cattle supplies to that Joplin market that we just haven't seen when you look at all of Missouri. And I just remind us, even within Missouri, we've had pockets that's extremely dry and other pockets of the state that have been very good. So when you look at the state as a whole, you don't see that much increase in either beef cow sales or feeder cattle sales, yet you can find particular markets that are pretty serious in terms of the increase that we've seen. So we know drought matters, and when you have hay prices that, according to AMS, exceed the hay prices that we saw back in 2012, you know you have some issues for cattle producers. I believe our governor here in the state said for the first time ever he's had to feed hay already in August. It just tells you how short we are in some parts of the state.
And I know Missouri, as well as some other areas, are working to make that hay, while not readily available, but easier to access for those that are already, or trying to at least make that access easier for those that are struggling and in need of it already.
Yeah, absolutely. And I will say, we have to remind ourselves that there are some feed alternatives that are a lot cheaper than perhaps, where they were back in the 2012 drought when all prices were higher, as we saw not only shortness in hay supplies, but also corn, et cetera. And so I encourage producers to think about some of those feeding alternatives that might help their bottom line a little bit relative to feeding hay all the time.
Let's get into today's cattle on feed report, Scott. Some interesting information as you dig deeper into those numbers.
Yeah, absolutely. So we'll start, first of all, by, if you look at on feed as of August 1, coming in at 104.6, that's pretty close to the pre-report estimates. Yet when you look at those placed in July, setting at 107.9, that was almost 2.5 percentage points above the midpoint of the pre-report estimate. I just remind us that pre-report estimate had a really wide range, as I think analysts really grappled with how the effects of the drought were going to pull calves forward. I think when you look at the report, you can start to see some signs that, in fact, we did pull calves forward. When you look at those calves in feed yards that are under 600 pounds, that's where we got the largest increase relative to a year ago. So I do think we're seeing some calves move sooner than would have been the case, just as folks are trying to stretch that pasture and hay supply as far as they can.
I think it's interesting, Scott, as I look at markets daily and look at some of those regional markets, to see the number, how much the number has changed on those cattle that are under 600 pounds when you're looking at percentage of the day's offering.
Yeah, I just remind us that there's a lot of producers that don't like to sell lightweight calves, and they'll do anything they can to try to avoid that. But when you run out of pasture and you run out of hay, you don't have many alternatives. And I think we're starting to see some pull the trigger on making some changes, just being too short.
Anything else we're looking at as it relates into that cattle on feed report, maybe on drought or some of the other issues cattle producers are watching?
I'd just say we have to continue to watch what's happening on the drought side of this. As we think about some of those spring calves are just now potentially starting to see the markets. What do producers decide to do with those cows if they don't have enough hay to get through the winter? This could really set in motion some interesting outcomes for the cattle industry in 2019. You know, if we look at those January 1 beef cow counts and all of a sudden we're down relative to a year ago, although for those that had to get rid of cows, that's certainly a bad situation. We could be in by late 2019 in a much better supply situation, if you will, in terms of not a lot of growth or relative to where we were this year. So there's some planning that I think producers need to look at, and paying attention to where the weather situation is really important for that.
As we talk about other things going on relating to markets, I don't think we can not talk about African swine fever in China. A third and fourth case were identified this week in China. And as you and I have talked about previously, the distance between all of those cases is pretty significant, especially when you take into account where those pigs originated from. Originally, I'm assuming they were the weaner pigs headed into what is like 600 miles. So from the point of origination to that first outbreak. So that's something that we're continuing to watch as well.
Yeah, absolutely. So all we really know there is that, you know, when you have these cases that are getting that far apart as well, I think you have to have stronger and stronger action to try to slow or stop the spread of African swine fever. We just know it's very contagious in terms of how quickly it spreads. So more cases, more spread apart, to me suggests that the Chinese may have to take stronger actions over time if they want to try to get that outbreak under control, which is nothing but positive for the rest of the hog world. When you got half of your pork production occurring in China, anything that cuts those supplies dramatically as we start to get here in late 2018 into early 2019 could be positive for the United States pork industry.
Scott, you and I talked earlier this week over the phone about the impact of this potentially on the market. I thought you brought up a really interesting point, the number of sows in China in comparison to what is here in the U.S.
Yeah, so we're looking at about 6 million head of sows in the United States today, compared to somewhere around 45 million when you look at what's going on in China. So their industry dwarfs ours. Now, we're much more productive with those 6 million sows that we have here in the U.S. than what we see in China. But still, you just don't want to forget that half the world's pork is produced and consumed in China. And you have a disease outbreak that starts to affect a large proportion of what's going on in China. The ripple effects could be large for the United States as the Chinese look for supplies of pork. And even with large tariffs, that might give us an opportunity to export a lot of pork to China under that kind of scenario. We'll just have to wait and see what we get at the end of the day in terms of additional cases as we move forward.
Scott, I think there's a lot of wait and see, not just on the African swine fever, but the talks, while they're suspected to be very low level talks, we are making, I guess, maybe some progress in China. There's rumors that there's progress coming out of other areas, Mexico specifically. So is that all playing into this whole global market and what's going on with hog markets as well?
I think so. We're going to go week by week here and see whether or not we get any kind of movement that might open up markets, that Chinese market in particular. Again, that becomes one of these 0-1s. We're talking about significant tariffs occurring on pork products going to China. If those were to go back to zero or nearly zero, all those things can be extremely positive in terms of what happens on the trade front for us.
All right, that's it for this week. Looking ahead to next week, what are we watching report-wise?
Yeah, so we're going to end next week with Restaurant Performance Index. We'll see a little bit in terms of what's happening on the domestic demand side of the picture. Also, out midweek, we're going to get another look at where U.S. farm income is being projected by ERS. It will be. I'll be curious to see where they come out for 2018 in terms of net farm income.
And hopefully we'll also be able to talk a little trade aid and maybe some progress on some of those trade deals as well.
We certainly expect to see some news next week on that front as well. That's true.
Scott, have a great weekend. We will talk to you next Friday.
Very good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.